Pretty sure Mario Gabelli has never been mistaken for a meme stock investor. Over the past year, GLDIX, his Gabelli Gold Fund, has shown pretty stellar returns of 194%. Mario is here on the fundamentals behind the frantic run that indicated to him that the rally can continue. Mario, great to see you.
Great to see you, and I see you wore your gold to talk about the gold fund.
It's fake,
I know. Stop. I don't have to worry about 6th Avenue for you. Look, Caesar Bryan and I met 30-odd years ago. Caesar was a barrister. In London, he sold his roll and his rig and became an analyst covering the mining industry. He joined us somewhere around 1989. And we've had some volatility in gold since then. The recent dynamics are started off because if you're getting American dollars and your name is China, you don't want to buy and hold currency, so you want to store a value. Gold is put, and Poland and others are doing this.
Well, you don't want to buy and hold the dollar, right? The dollar.
No, you want to hold the gold bullion in your vaults, and you have it bought. So those are the things that started the process. And now, obviously, it's become a product of choice. So we just had 2 analysts go to Australia and go to Western Australia to visit. They went into the mines, 7 of them. So we're digging. Secondly, our fund is unleveraged, but the leverage is that when the price of gold goes up, what happens is the leverage is in the miners because they generate significant cash flow because costs don't rise as high as the revenues per ounce. That's it. Not complicated.
But you also believe, I would imagine, that because central banks are pouring into the gold trade, that could keep this rally going. I mean, yesterday, gold saw its biggest advance in 6 years.
Well, it happens. Independent of that, at some point, China will say, let me wait 2 weeks let the steam out. So you get triple X's, you get triple ETFs, you get the holders of the bullion. When you're looking at how to make money in gold, and why do you want to hold it? Okay, you and I could have gone to Costco and bought coins for $2,250. So the question is, what is my tax rate? If you own the physical gold like bullion or an ETF that owns the bullion, you're going to be paying a higher tax rate because it's considered, in quotes, a commodity versus owning a mutual fund like ours. So that's what Caesar Bryan does every day, and Chris Mancini, and they plow away and they dig away for the ideas.
It sure feels like the metals trade is spreading now to the industrial metals, which brings me to auto parts. Not a sexy business, but you believe that auto parts are a sexy business, right?
Well, Liz, what happened is I was a sell-side analyst, that is, covered the industry of automotive, and I'd visit General Motors, Ford, Chrysler, Studebaker, blah, blah, blah. And I said, how many cars are on the road? So the razor is the car and the razor blades are the parts. So what we did and we do, we're having our 50th year of a conference in Las Vegas when the industry meets for motor equipment manufacturing, blah, blah, blah. And so when you have snow like this and you had 40,000 miles on your tires, you said, I can get another 5,000. Now you're saying maybe I got to change them. So the parts for 300 million cars in the United States are in demand, and you want to own stocks and speculate on some.
And you love Advance Auto Parts. It's down about 15% over the past 6 months, kind of flat year over year. Is this more of an aging vehicle fleet catalyst, do you think?
No, what happens is the following. You had O'Reilly, you had AutoZone, you have Genuine Parts, which is NAPA, N-A-P-A, yeah. And you have Advance, and they did some dynamics that were not, let's say, fulfilling. I have my car. It's down. I bring it to my mechanic. He's got to get a part that day because I'm not going to wait. They did not do as well. The new CEO, Shane O'Kelly, is basically helping out, getting parts there to fulfill. So the stock is 50, down from 170, where the other ones are all hitting reasonable highs. Genuine Parts is doing better. Independent of that, we think 2 years out they're going to earn $450 and sell at $90.
Let's get to a sexy trade that most people think is sexy.
I thought you would bring that up.
Not you, Mario.
I agree with that, but go ahead.
Live entertainment. You believe that this is the big trend, I would imagine, 2026 and beyond. In what form, what names?
It's a great question because the second part is corporate lovemaking. In other words, financial engineering, spin-offs, sale, acquisitions. So, for example, today, Modine, an auto parts company, is selling their auto parts business to go more into services and equipment for data centers. And they're doing what they call a financial engineering and reverse Morris Trust. Not important. Experiences. Live entertainment, live news. I don't want to watch the Knicks game that took place last night where they had a disastrous first half and then came roaring back in the third and fourth quarters.
You want to watch it live? Yeah,
I do. So the notion of entertainment and sports is important to us. So as a result of that, we would like to individual investors. I want you to own a piece of Madison Square Garden sports. I know it's the Knicks and the Rangers, and you're a Boston Celtics fan. I also want you to own a baseball team, Atlanta Braves. The stock is $42. We think Malone will sell it in 2 years. But right now, the World Cup is coming to the United States.
Sure.
And what I want you to think about is what the rest of the world calls football, we call it soccer. So how do we participate in that? And there's a company in England that's like those in New York, about similar to the Mets. They're not doing well. Man U, Manchester United. Symbol is MANU. There's 174 million shares. And the Glazers that own the team in the United States down in Tampa, they own control of it, but they sold a percentage to Radcliffe and Sir Radcliffe, and they, within a year, will be doing some financial engineering there. So those are the things we like.
You own both Warner and Paramount. I have to ask you, because right now it looks like Warner Brothers is walking down the aisle with Netflix. The bride is ready. She's picked her groom. And yet my question to you is, in terms of where you and the other shareholders and where that perception stands, is there a way for Paramount to win this without upping their bid?
This
yes
is
or no?
First of all, I want to thank Zasloff for being the orchestra leader for this dynamic. A year ago, the stock was a low-level teenager.
11 or 12?
So the stock today is 28. WBD is a symbol. Bottom line, they have 2.5 million shares. I now am wearing my arbitrage hat. If I buy the stock at 28 and I get 30, I make $2. 2 over 28 is 14. So that's 7% annualized. I think it'll take at least 9 months to get that deal done. So this is an okay return for ARBs. Then you got a possibility of a KISS. That means in arbitrage language, another price.
Can Paramount win it without going higher?
At the moment, I think they're in the lead by a nose.
Paramount?
Paramount, because the $27.75, finally they raised all cash on Netflix, which we also own, and basically they're giving you a spin-off, Discovery. And that spin-off, we don't know. We're getting more details just recently about how much debt they're going to have, $17 billion. So the question is, what do I pay for it? They should go all cash. Then Paramount would bump. Right now, it's a very clever arbitrage game, and two love makers, and we're just delighted. For our taxable clients, we'd probably harvest a little bit.
Well, you've got all your bases covered.
Absolutely.
Do you foresee Paramount upping its bid?
I would say that at the moment, it's dead heat, except for one thing.
That's not the answer to
No, I agree with that, and I'm not going to give you one, because right now, they will have a better time to finish, so that I, as an arbitrageurs are those that play these games, and they will get my money a little faster.
Well, both Netflix and Paramount are down 24% and 28% respectively since the bid was put in November 20th for Warner Brothers Discovery. Mario, thank you. Great to see you.
We're privileged to be here and talk about our favorite subject, and that is stocks. Thank you for listening.
You're a legend. We thank you very much.